Hello, this is the TradeSite U.S. Stocks and Futures Market Preview for Thursday, the 28th of June 2018, and Friday the 29th. As usual, we don't typically do market previews for Fridays. This week won't be any exception, considering we have the end of quarter, end of month, and end of half year on Friday, so it's probably not going to be much of a day. We're also heading into next week, which is, as I've said, a disjointed week with the 4th of July holiday on Monday. So you got Monday, Tuesday for trading. Maybe Tuesday's even a half day. I haven't checked. And then you have Wednesday off, and then Thursday, Friday for trading. And people are going to be on vacation, frankly, with that type of a layout. So I wouldn't expect to get much out of the markets next week. And in fact, I'll be on the road at least for part of it. We do have an early close on Tuesday. So not only do we have not only do we have Wednesday off, but Thursday we close. The stock market closes at 1 p.m. So it's only a 3.5 hour session on Tuesday. Nobody's gonna be around for that. It's kind of like the day after Thanksgiving, and that makes you wonder why anybody would show up for Monday, and then you come back and you've only got Thursday, Friday. It's not going to be interesting. We will probably do a market preview on YouTube for the weekend, for the whole week, and then not do any more previews and stuff. And we won't be making trade calls for most of the week in the report. We will certainly be showing up probably Monday and Thursday and Friday mornings to see what happens and see if we can get something called here in the room. But again, you don't want to trade in a bad environment, and this is going to be a very holiday-esque environment. All right, so here's the ES front month futures contract. This is the daily chart of the broad market and futures form. Slipped back again a bit today after starting out a little bit up. Let's go through the major indices, then we'll look at the intra-week action, and then we'll go from there. So crude oil, after selling off last month, that made new highs, sold off, and now all the way back to the highs, 72.32. Not great as people are spending summertime traveling. Gold down $1.70, so this is back near the lows of the year. S&P cash index loses 23.43. Nothing pretty about that chart. The NASDAQ 100 down almost another 100 points. That's new lows for the last month. And we're threatening to break the trend line that's currently in place. The SOX loses 32.89. That's coming up rapidly on the lows of the year. So be aware of that. Biotech's down 72.97. The VIX gains $1.99. Trend closes at 0.96. That puts the 10-day moving average at 1.09. NASDAQ volume, 2.3 billion shares. Advance decline ratio on the NASDAQ. Look at this. We were just talking 2 days ago about how bad that was. The worst of the year at negative almost 1,600. Today was worse. And this was the sign early. Even though the market was holding up, there was a small gap up, and the futures at one point were even trying to hit highs without much aggression. The advance decline ratio was negative on the NASDAQ, and it ended up at negative 1733, one of the worst we have seen. Advance decline ratio on the New York down to negative 1243. Google loses $15.68. That chart does not look good. Apple just gives back 27 cents. Netflix down 9. Amazon down 30.58. Tesla gains $2.50. TLT, the 20-year bond ETF, back up. Up there is good for rates. 1.14. Goldman Sachs loses $1.40. If it cracks Tuesday's lows, it's going to be a short all over again on Goldman Sachs. Let's take a quick look at the intraday action. Here's 5-minute candles for the last 2 days. So, Monday was a little bit of action, but Tuesday was a flat opening and really just didn't do much. Closed right where we opened. Wednesday, we gapped up small. We wiggled both ways early. We tried to make new highs. Came back down. 2 hours in, we're just sitting flat for where we opened. And then coming in the middle of the lunch period, we broke down, filled the gap, and kept going, and then went down to the lows of the prior day. NASDAQ side, same story. Almost identical charts, the ES and the NQs. All right, so what does that leave for the week in terms of economic data? Thursday, we got the final look at gross domestic product from the first quarter. That's not a big deal because it's the final adjustment. Should be about 2.2% growth. That's not that exciting. Unemployment claims, the weekly number, 220K. Final GDP price index, 1.9%. Natty gas number comes out at 10:30. On Friday, we've got core PCE price index and personal income and spending an hour before the bell. Chicago PMI, 15 minutes in. University of Michigan sentiment, 30 minutes in. But again, remember, it's the statement printing for the end of the quarter, end of the half year. They tend to have the market pegged, and most of the big players, honestly, here's how they're going to do it. They're going to be heading out Thursday, and they will be back a week from Monday. Skip the holiday week. So if we don't see volume in the markets next week, we won't be doing much. That's how we keep ourselves profitable for the year. Don't overtrade when in a bad market. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading rest of your week and potentially next